Hi guys, hoping you're having a wonderful weekend, and welcome to my second tutorial on support and resistance. If you did watch my first video, I did mention that there was a lot of information and I couldn't cram it all into one video. So I'm bringing you a part 2, which will basically cover the points that I couldn't in the first video. If you haven't watched the first video, here's the link. You can just click on this tab, and after you're done watching the first video, you can then come to this one. In today's video on support and resistance, we're going to be looking at how to trade breakouts. We're also going to be looking at support and resistance on trends, or on a graph that has a specific trend. And I'll also let you know about the second secret of the support and resistance analysis tool. So without keeping you waiting, guys, let me get into it. So I've just drawn a basic support and resistance line here and a semi graph. And if you've noticed, there's a bit of a breakout. So when the trend or the line breaks the resistance or breaks the support, so on a support line you'd basically have something like this. We call this a breakout. And there's two ways you can basically approach this, depending on how you trade personally. So firstly, there's the conservative approach, and there is the going in guns blazing. Both have their pros and cons. So if you saw this and you decided that this is confirmation that it is a breakthrough, you would be an aggressive trader, and you would use the aggressive approach, and you would automatically assume that you will have a continuation. So the benefits of this is that you will manage to get the early profits at this range, because at the moment of the breakout you decided to make your trade and bet on the rise. But the consequences are it's extremely risky. Why we're saying this is because there is a chance that this can be a false breakout, and what you will see is maybe it breaks out, and instead of continuing, it decides to go back down. So what you have is a false breakout. It just peeped over the resistance line and went back down. So like I said, the benefits are, if it does continue to go up, you have the early profits. If it continues to go down, unfortunately you are then making a loss, then you call it wrong. The other approach is the conservative approach. So what you would basically want, or what you'd basically do as on the conservative approach, is wait for a confirmation. So people mostly use candlesticks. So let's assume this is a candlestick. People would wait for the second candlestick or the third candlestick of this breakout to then make their purchase or make their trade. So you would wait for something like a second candlestick or a third candlestick, and then you'd be like, okay, so this will continue. The bad thing about this is you don't cash in on these early profits here, and you come in late, so you are falling a bit behind from the aggressive traders. But the benefits is it's safer. So if there is a false breakout, you are still safe. You're not making any losses at the expense of not making those early profits. So basically, depending on how you trade, you can decide if you're an aggressive trader or a conservative trader, and that's how you'd basically approach breakouts or false breakouts. This would apply at this point as well. You do have your false breakouts that do break through support lines as well, and basically that will apply here as well should it happen. Let's have a look at practical examples so that you guys can just quickly relate to. Okay guys, so here we're looking at Naspers on a 15-minute chart, and we basically have our resistance and our support. So this resistance is based on these points here, where we can clearly see that everything is held basically within these two lines. And our first example of a false breakthrough is this point here. So you can see there was a breakthrough. So basically an aggressive trader would have immediately assumed, once they saw this green candlestick, they would have assumed we'll see something like this. But unfortunately it was a false breakthrough and it went down, so they would have made a loss. We then see the trend continues. We test the same line here, we test the same line here, and then here we have a very big false breakthrough where it almost went to 298 from 293. And I'm assuming at this point a lot of people would have assumed that the breakthrough has gone through. But as you can see, it's still one candlestick. And the very next candlestick, we see a negative drop, and we see another false breakthrough. So this is basically what people would have assumed at these points and have made their losses. So if you were a conservative trader, waiting for the second candlestick to confirm that the breakthrough is true, as you can see here, the second candlestick is red, or you can consider this as the third candlestick, because we have one that broke through here. You have your second, which is green, and your third, which is red, which confirm that it's not a breakthrough and actually went down. Same here, you've got your first candlestick, and your second candlestick is saying nope, we're in the red. So the conservative traders would have basically nailed these false breakthroughs. So this is just to show you an example of if you are an aggressive trader, what you can expect. However, here you do have your breakthrough, but as you can see, it's very tame. So there could have been mixed reaction at this point here, but eventually the breakthrough did come through later on. And you can see this on the support line as well, where you have your fake breakthroughs here. This does seem like it was a breakthrough, because the support became a resistance, and the trend continued going down, and then we had a positive open. But you have your false breakthrough there and your false breakthrough there as well. This is why I basically use the conservative approach and always wait for a second candlestick to confirm. I'm not really rushed about making early profits. A profit is a profit to me, no matter how small. So I'm more conservative. But yeah, aggressive ones, they either have really good news that they're backing their trades on, but yeah. So that's just an example on how to see your breakthroughs and how to trade around breakthroughs. So so now we're looking at trend lines, and the same principle applies. You can use support and resistance on uptrends or downtrends, just like how I've drawn this example here. This basically helps you determine the parameter of the fluctuations, and where you can expect the dips to come from and where you can expect the rises to come from in your trend that you're analyzing, whether it's an uptrend or a downtrend. So same thing applies with the normal support and resistance line, where this will be your resistance and this will be your support. You hardly get the reversal rule on this though. Occasionally, if there is a break, you then assume a different support or resistance line, depending on how big the break is, if you're analyzing on a trend. But generally the same rules still do apply. You just check this to see the parameters of your of your waves, if I can use that term, and you just look out for that breakthrough to see whether the trend is then changing. Generally, you will also get false breakthroughs sometimes, so you should look out for that as well. So yeah, so let's have a look at a practical example where we can draw support and resistance on an up or down trend. Okay guys, so here we're looking at transaction capital. They had this trend happening from I would say the 25th until the 17th, 25th of May to the 17th of June. And this is basically what I'm saying. So you have your support line there and you have your resistance line there as trend lines, which is what you would call them. And you can see that you have your same rebounds on the specific lines, and these are basically within these parameters until you have your breakthrough right here. You've got your false breakthroughs, just like your normal support and resistance. This was a very big false breakthrough. There must have been some good news there. You have your false breakthrough there as well. So like I said, same rules basically apply, but chances are you won't see the reversal where if you break this line it becomes a support. As you can see here, once it breaks through, it usually is through unless it's a false breakthrough, but you'll hardly see a reaction where you have a breakthrough and then you have a bounce on this line. It's usually something up and gone, or like as you can see here, it's down and basically gone. And this is also the perfect chart I can use to tell you about the other secret that support and resistance has. And it basically goes like this. So the longer the graph is within the support and resistance, the bigger the breakthrough will be. So as you can see here, it stayed within these parameters for quite some time, and the eventual breakthrough was quite big, and that's the basic rule. So if you are analyzing a graph and you realize that it's been in the support and resistance for quite some time, you can expect a very big breakthrough. Whether it's positive or negative, it's going to be quite huge. So that's the other little secret you can expect from support and resistance. So yeah guys, that's my tutorial. That basically covers up most of support and resistance. If you have any questions, don't hesitate to drop me a question. I will try my best to respond to you, whether on YouTube or Twitter. I'm quite handy at responding to messages sent my way. So yeah guys, thanks for watching this video. Don't forget to like and subscribe, and look out for the next video. Peace.